Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Lots of cues this morning. Of course, the GIFT Nifty hinting at a rebound after yesterday's sell-off. Looks like we are poised to clock that 21,700 mark once again. Of course, we have positive cues coming in from Wall Street, and there has been a further slump in crude prices with Brent hovering around that $76 per barrel mark. So lots of cues to digest, lots of stocks to watch out for, including the likes of Bajaj Auto, Zee, and a whole host of other stocks. And of course, not to forget your stock-related queries that we will be taking up during the show. So if you have any stock-related queries, send them in to us on our YouTube feed and we will try and take them up. And of course, before we head any further, let's take a look at the top headlines at this hour. Wall Street clocks in smart gains overnight, led by tech stocks as Nasdaq surges over 2%. A sharp fall in Boeing shares, however, keeps Dow Jones' up move in check. Asia trades largely higher on a strong handover from Wall Street. The Nikkei rallies nearly 1.5% as Tokyo inflation eases on expected lines. The GIFT Nifty is indicating a positive start after yesterday's drubbing, so looks like we are in for a short covering rally today. Crude slumps with the Brent correcting nearly 4% to under $76 a barrel as price cuts by Saudi Arabia raise concerns over global demand. Meanwhile, gold slips to a 3-week low ahead of US inflation data later this week. Among stocks in news this morning, watch out for Bajaj Auto as it announces a mega 4,000 crore rupee buyback for 1.4% equity priced at 10,000 rupees a share, which is a 43% premium to yesterday's closing price. The promoters will also participate in the buyback. And also in focus will be Zee, as Bloomberg report suggests that its merger with Sony may be on the rocks. Well, without any delay, let me get on board our technical expert for today. Joining me is Sacchitanand Uttekar, who's a VP Research, Derivatives and Technicals at TradeBulls Securities. Great to have you on the show, Sacchitanand. First of all, wishing you a very happy new year. This is the first time I'm getting to interact with you this year. Hopefully, you will have a profitable year going forward. But, talking about the market setup, really, 2024 rather has started on a very rocky note. We've seen an increase in volatility, and yesterday, of course, a drubbing coming in, so to say, 21,500 mark. That's a crucial support level that we managed to, clutch on to yesterday. But we have broken below that 20-day EMA, right? So, GIFT Nifty today hinting at a positive start. What is the setup looking like? And on the higher side, what is the kind of level you'll be watching out for? And not to forget the fact that Bank Nifty saw a sharp drubbing in the last hour of trade, right? So, what should we expect there?
Good morning, Nandita, and wish you a happy new year too. Clearly, if you look at the performance of the Nifty since the beginning of this month, it has not been very decisive. It has been oscillating within this particular range of 21,500 on the lower side and facing some supply pressure at around 21,740, 800 kind of a zone. So I think clearly the range is well defined and it has been oscillating within the same. We still don't have any specific, conclusion where this particular, trend is heading towards on the short term chart. But if you look at the broader structure still remains positive. Yesterday again we saw the Nifty closing below its 5-day exponential moving average support. This was the second time that it has closed since last 5 trading sessions. But eventually, it is better to wait for a follow-through action to really conclude a specific breakdown. So as of now, I think the way GIFT Nifty is again showing a rebound, the entire sequence could change on the higher side. So unless we don't see any firm closing below 21,330 on a daily chart, so we are not expecting markets to display a decisive correction, and that's why we continue with our strategy of buying every declines until then. On the higher side, for the day at least, 21,730 would be an important cluster. In case if that particular level is breached, then probably we may see a very strong rally unfolding, during this particular week itself, which could help the indices, scale higher towards 22,000, which is our intermediate target. So as of now, I think it's a range-bound market. Every decline is a good opportunity. Keeping a stop loss at 21,330 on a closing basis, one can still look for buying opportunities. When it comes to Nifty Bank, again, 47,500 has been a very important cluster support. we have its 5-week exponential moving average placed at the same zone, and its 20-day exponential moving average is also placed somewhere close to around 47,540. So I think breaching below that and sustaining below that, then probably we may see some conclusive move. But even here, the data is suggesting that the index may keep on oscillating within 48,200 on the higher side and 47,500 on the lower side. So even here, I think it's a good mean reversion trend that we are expecting, and one can look at these declines to build some long positions.
All right, buy on declines remains the strategy on the Nifty and Nifty Bank as well. But hold that thought, Sacchitanand. We'll come back and talk about specific stocks and the stocks in focus like Bajaj Auto as well. But let me also bring on board Kaustubh Pawaskar, who's the Deputy VP Fundamental Research at Sharekhan, joining in this morning. Great to have you on the show, Kaustubh. Wish you a very happy New Year. But the new year hasn't really kicked off on a very good note for the FMCG pack. The Q3 updates have trickled in. Not good news, at least on the volumes front, for the likes of Marico, GCPL, and we saw the stocks react to that as well yesterday. Marico and GCPL slipping anywhere between 3 to 5% apiece. But looking at the volume picture, Kaustubh, nothing different from what we saw in Q2. In fact, as I mentioned, disappointing volume growth despite festive season. But do you expect the picture to improve in the run-up to general elections amid increased government spends?
Good morning, Nandita. Happy New Year to you and all the viewers. So it was expected that in quarter three there might be some pickup in volumes because of the festive season, and it was expected that there might be some improvement in the rural demand, which was not seen on the board. Most of the companies were talking about recovery in the rural demand in the second half of the year, but I believe that it will take some time. In quarter three as well, we have seen volume growth to be lower in low single digit to mid single digit for most of the companies who have come out with an update. So it is in line with what the picture was in quarter two FY 2024. As you correctly said, that there are expectations that with budget with election down the line and post that the budget will be declared. There is expectation that some drivers might be there for or government might come out with some initiatives to improve the sentiments in the rural markets, and that might help the volume picture to slightly improve in the quarters ahead. So what we are expecting is that from quarter one of FY 2025 or quarter two of FY 2025, we might see any uptick in the volumes, because the raw material prices have corrected. Companies have taken required price cuts in its portfolio. Inflation is lower, so that provides some bit of comfort for the consumers. But all these factors turning out to be in clear-cut revival in volumes, I believe that it will take another quarter or two.
Right. When you talk about names like HUL and Britannia, vis-a-vis these names like Marico, Dabur, which one would you prefer at the current juncture? Because the volumes are expected to disappoint with respect to HUL as well, right? So do you think one should look at mid-cap FMCG names right now?
Obviously, because it is not only just the demand environment which is sluggish in the rural market. We have also seen small players, regional players getting aggressive in the market because of the lower commodity prices. They have become aggressive, and there is a stiff competition at the bottom of the pyramid. So that is also something which is kind of hurting the consumer good companies. I believe the companies where who are focusing on expanding their distribution reach, who has very low market share, trying to improve their market share in key markets, who are launching new products into their basket. So I believe the smaller companies are expected to do well with their strategies in place. The companies who have already have a strong market positioning in some of the categories, will feel pressure on the volumes because of the mutedness which is there in the rural market. But companies like we have seen companies like Vector Foods, or Jyoti Laboratories doing much better compared to the other large packs. So I believe that these companies will continue to do well in the near term compared to the large packs. I believe that large packs will definitely see revival in the volumes, but as I said, there are 2 to 3 drivers which should play for them in the quarters ahead.
Are companies also sitting on high cost inventory, Kaustubh, right now?
For past 2 quarters, there have been, the companies since they have reduced their prices. Normally, the channel partners tend to sit with lower inventories, and there are also cases like in the case of Marico, we have gone through the press release, and they have stated that they are also focusing on improving the returns for channel partners, and in that context, they are reducing, destocking the inventories. That restructuring is happening, and it will take maybe another quarter. And I believe that once that happens, you might see, volumes to come back on track. So that will also add on to the volumes. Plus, we have also seen most of the companies have also increased the grammages, which is a kind of an indirect price cuts which they are taking into their portfolio.
Right, 2 questions really. One with respect to Britannia, given the fact that the company managed to stay resilient during COVID times as the biscuit category wasn't really impacted. But going forward, of course, valuations are expensive here. But going forward for the stock to re-rate, do you think we need some new growth triggers?
See, obviously, Britannia is working on that. So it is not just the biscuit. So it is focusing on the entire snacking categories, and we have seen that it is focusing on adjacencies to work well for them. So they already have a tie-up in their dairy business. They want to refocus on the cheese and other dairy products. Their cakes, rusk, wafer biscuits, they are doing extremely well. So whatever new launches they have done into adjacencies, they are focusing on that, scaling it up, and they are supporting it with building up the capacities. So I think for Britannia, the key trigger would be the market share gains. What it is happening in its core biscuit portfolio. While on the adjacencies, the focus is on the scale up, which is expected in the coming years. So that will really drive consistent kind of a growth for Britannia in the coming years. Plus, it is also focusing on the international business, where the current contribution is quite low, but the focus is on increasing the contribution of the international business as well. But we have seen Britannia in terms of margins, they have done extremely well in past 7 to 8 years, and I think with the consistent kind of a revenue growth, if we anticipate that in the coming years, I think they will also have a better, stable kind of a margin scenario, which will help their earnings to be better in the coming years.
All right, last question really. For Godrej, in particular, of course, post their recent acquisition of, Raymond's FMCG portfolio, they have ramped up ad spends on the likes of Kama Sutra and Park Avenue deodorants, right? How soon do you expect this to reflect in the earnings?
See, though Godrej is targeting that from FY25, the acquired portfolio should really turn out well for them in terms of adding to the profitability. So they are working on those targets. But for Godrej, their portfolio, core portfolio has to play well, and they have taken some decisive actions in its portfolio in the domestic market. This quarter also we have seen mid-single digit kind of volume growth in the domestic business. They have restructured their African business as well, and that should help them to see a good growth in its Africa business in the coming years. One thing which is affecting the Godrej overall growth is the currency devaluation in Africa and Latin America, which also had an impact on Q3 performance as well. But I believe that for Godrej to really play well, whatever category is it present into and whatever geography it is present into, I think there the core fundamentals should improve, and we have already started seeing that happening into Indonesian market. So Africa, they have already done whatever the restructuring plans they have. they are working on it. So that should add to the revenues in the coming years, and obviously core domestic portfolio should do well.
All right, with that, Kaustubh, afraid you're running out of time here, but thanks a lot for taking out time and sharing your insights with us. Always a pleasure speaking to you.
Thank you.
Well, let's go back to Sacchitanand and talk about stocks that will be making headlines in today's session. Bajaj Auto, of course, the much anticipated buyback size has also been announced. 4,000 crore rupee buyback, of course. In fact, the Bajaj Auto will buy back shares via the tender offer route. Vis-a-vis the open market route that it adopted in its last buyback, which was back in 2022, right? So Bajaj Auto will be buying 40 lakh shares at an average price of 10,000 rupees per share, which implies a 43% premium to yesterday's close price. In fact, in the run-up to this announcement, of course, Bajaj Auto shares had already run up quite a bit. 7,000 rupees is the level that it had crossed on the 3rd of Jan, hitting a fresh high, right? But right now, how would you expect investors to navigate this particular stock? Do you think all the upside is already priced in, or do you think post yesterday's announcement we could see some bit of positive reaction coming in as well?
Well, Nandita, if we look at the price performance, the price performance has been much stronger. It has been one of the strongest, two-wheeler stocks in the last few months. And the rally from the base at around 3,500 till 7,000 has been very vertical. So only once we saw some consolidation in the month of September. And since then, the stock has not really seen any decisive correction. So even if you look at the monthly RSI, it is quoting somewhere close to around 80 mark. And its weekly RSI almost at around 89. So I think clearly the indication is that the stock is in an extremely overbought territory, and from here any flaring moves on the higher side should be tackled with a lot of caution. On the lower side, the support base on an immediate basis is definitely trending at around 6,600, where its 20-day exponential moving average is also placed. So I think it's better to be cautious. Not to chase momentum. In case if someone is holding on to certain long positions, then I would prefer booking some profits and trailing stop losses to 6,800 on a weekly closing basis.
All right, that's the view on Bajaj Auto. In fact, Nuvama believes that the acceptance ratio, the retail acceptance ratio, could be around 4 to 10, could be low around 4 to 6% or thereabouts. So that could, of course, have some bearing going forward. But of course, let's also talk about, a brokerage call of the day. Of course, that's coming in on Tata Motors. The Q3 update came in, and of course, the JLR demand remains strong. And of course, if you look at what Morgan Stanley has to say on this particular stock, it has an overweight rating with target price of somewhere around 890 rupees per share. In fact, most of the brokerages are expecting Tata Motors to, clock that 900 mark as well pretty soon. Morgan Stanley believes that JLR could be the next big re-rating trigger for this particular company. So going forward, Tata Motors 900, do you think that's an achievable zone in the next, say, 5 to 6 months?
Well, certainly, yes. In fact, we are of the opinion that the stock could scale towards 946, 948 kind of a zone. But on the short-term basis, it has been facing a lot of resistance at 800 mark. Even if you look at the option cluster, it is indicating that that particular resistance is very important for the stock to unlock any further direction momentum play. On the lower side, it has shown some resilience at around the immediate support of around 780, but I think that particular support is very fragile. So it's better to, keep trailing your stop losses higher. I think a very decisive brace is somewhere placed around 760. So keeping a stop loss at around 755, in case if we see any slippages below 780, I think that will again provide a good opportunity for building some long positions. On the higher side, I think momentum will only unfold once the stock starts trending confidently above that 810 mark.
All right, that's the view on Tata Motors. Another stock that will be in focus today would be Zee, right? Sacchitanand, of course, Bloomberg report suggests that Sony could be on the verge of calling off that mega $10 billion merger. And of course, that could come as a dampener because the stock has already run up over nearly 40% in the last 6 months, right? But negative impact on the stock today? Of course, back if you look at the week gone by, Zee has shed somewhere around 3% or thereabouts. Do you think the stock could see some bit of selling pressure today?
Looks like, in fact, if you look at the price action which unfolded on 10th of August 2023, the stock made a decisive move towards 295 zone. And since then, it has been struggling near this particular area. Even yesterday, we saw a confirmation of a bearish engulfing formation on the candlestick front. And we may see the stock, finding itself difficult to sustain at around, 280, 290 kind of a level. So we may see an immediate reaction on the stock. On a positional basis, the entire pattern looks like a classic consolidation, and probably the base of the consolidation is placed at around 240. So the stock may revisit that particular level as well. So in case if someone is riding on to a short position since yesterday, then I would recommend holding on to it. Any pullbacks towards 285 would again give you an opportunity to create fresh shorts. Keep a stop loss at around 295 on a closing basis, and review your positions once the stock starts trending near to that 260, 265 mark.
All right, that's the view on Zee. Just wanted to point out that Elara believes that the probability of the merger being called off is low, given the possibility of an increase in competition and as the RIL Disney talks around the Disney RIL merger also gaining traction. But let's take up some viewer queries that are trickling in on that note. Bandhan Bank, this stock was the top Nifty 500 loser yesterday, 7% or so. It shed somewhere around 7% in yesterday's session. This morning we have a query coming in from Naveen on this particular stock. Do you think this is one of the weakest links when it comes to the banking pack right now, Sacchitanand?
Certainly, Nandita. In fact, during this entire rally for the last 2 years, we have not seen this particular stock really performing well. On the weekly, monthly scale, it is still displaying a low top, low bottom sequence. And recently, the kind of movement that we saw from the base at around 240 towards 260, that movement was very gradual as compared to its previous wave. And the recent, in the last 2 days, the way it has dropped from that swing high at around 265 right up to 230, it looks like a fresh impulse on the lower side. So going forward, any pullbacks should provide a relief rally for exits. And one should, shy away from, any bottoming out, decisions here. Clearly, the trend is still weak, and we may see this particular stock, again trending lower towards 220, 225 kind of a zone. So it's better to, remain on the sideline in case if the pullback comes in. The pullback should be utilized to exit long positions, if any, and probably create some shorts.
All right, that's the view on Bandhan Bank. In fact, we had a couple of more people writing in on this particular stock. Suryakant Mahapatra was the other one who wanted to know. Hope this answers your query. But let's take up the next query. This one is coming in from Rupak Mehta. He has queries on two chemical stocks now, Sacchitanand, SRF and PI Industries. Chemicals as a pocket, of course, have been under pressure. In fact, most of these experts believe that this could actually emerge as a dark horse going forward. But do you see some bit of revival in fortunes on the charts? Rupak wants to know the short to medium term outlook on these stocks.
So for SRF, I think the stock is still, in a broader range. On the lower side, it has displayed a lot of conviction at around 2300, 2350 kind of a zone. And on the higher side, it has been facing some supply pressures at around 2500. So I think this particular oscillation may continue, but the major trend still remains positive. It has been holding on above its 20-week month exponential moving average well. And the recent pullback again provides a good opportunity. So I think any further declines towards 2300, 2350 should be utilized to create some long positions. The major trend breakdown may only unfold in case the stock starts trending below 2240 from here on. And on the higher side, once we have a confirmation of a breakout, then probably we may see a very strong 2 years of consolidation breakout, which may push the stock eventually towards 3000 levels. So a buy on declines strategy continues here. The support looks very strong at 2350, 2300 kind of thing.
All right, that's you then. Couple of more queries I want to quickly squeeze in. This one is coming in from Kuntal. Wants to know your thoughts on BSE. Of course, after the stupendous rally, stock has cooled off a bit last month or so. But going forward, 3,000 on the chart soon, or do you think more profit booking and more weakness likely?
Weakness certainly. If you look at last few weeks, the stock has been in a corrective mode. We may see some slippages, but I think again those slippages would be a good opportunity to create long positions. Overall, we don't expect the stock, to close below 1930 mark. So any declines towards 2100 should be utilized to create fresh long positions. The correction has been very gradual and very sustainable, despite of the fact that the stock is in an overbought territory. So that's why we are looking at more of consolidation before the next move unfolds towards 3000.
Very quickly, your thoughts on the OMC pack, given the fact that crude has come off quite a bit, once again. Yesterday, these stocks were buoyant. HPCL was up 2% or thereabouts. Do you see further up move today?
In fact, we did participate in the breakout move yesterday, but on a closing basis, it failed to sustain above that 440 mark. So going forward, I think it is better to keep trading the stop losses unless we don't see the stock slipping below 420 mark. The trajectory or the direction momentum play continues, and we may see a swing eventually towards 445, 450.
All right, we had queries on the OMC pack from Lokmanya Rampilla. Hope that answers your query, but I'm afraid with that we are running our time on this edition of Morning Trade. But before I let you go, Sacchitanand, what would you be flagging off for viewers this morning, and any FNO strategy for today on the index?
Well, from a trading perspective, we are highlighting two trading ideas. One of them is already being communicated to our clients. One on the short side, one on the long side. If you look at the FMCG pack yesterday, it was clearly one of the weakest pack, and out there, the way Marico collapsed below that 540 mark, that particular level was acting as a very strong support base for the last couple of weeks. It has also managed to register a closing below its 200-day exponential moving average. So we are of the opinion that unless we don't see this stock, sustaining or reviving above that 545 mark, the major trend could remain bearish. So that's why any pullback towards 526, 530 zone should be utilized to create fresh short positions. Keep a stop loss at around 534. And the trading target is well placed at around 510. The other stock that we have recommended to our clients is Kotak Mahindra Banks on the positive side. So despite of the fact that in the last two trading sessions, the stock has seen a vertical drop, but I think this was one of the first banks to start displaying a corrective move. On its 15-minute scale and 30-minute scale, we have some evidence of a positive divergence when it comes to its RSI. And that's why we believe that any further decline would be a good buying opportunity. So keeping a stop loss somewhere close to around 1805. Long positions are recommended in Kotak Mahindra Bank. We may see a rebound back to around 1900 levels in a day or so.
All right, those are the two stock recommendations from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in this morning. Of course, hope to touch base with you again next Tuesday.
Thank you, Nandita.
Well, with that, we've come to the end of this edition of Morning Trade. Thanks a lot for tuning in, but don't go anywhere because coming up next is Opening Bell.